Hello and welcome, everybody, to the All-Star Charts Gold Rush special event, the big move in energy stocks. I am here with my esteemed co-host today and good friend, Jason Pers. He is head of FIC here at All-Star Charts. And the truth is, he has nailed every turn of this commodity super cycle for many, many years now. This got started off of the 2020 lows. He's going to break it all down today, talk about what already happened, what is the commodity supercycle thesis in the first place, and most importantly, what's coming next and how do we position for it. I'm just here to hang out. I'm the hype man. Jason's going to drive and tell you the story. How are you doing today, buddy?
Hey man, I'm doing good. This is exciting. We did the last one where we talked about commodities was awesome. That was such a
Yeah.
fun video, so I'm excited to hop into it today. Got a bunch of great charts for everybody. Got a bunch of ideas that everybody can pay attention to, and this is going to be awesome.
I feel like I don't talk about commodities enough, Jason. You know how I feel about them. I like them. Maybe we get distracted sometimes, right? In like these bull markets characterized by broadening participation where so much is working. Commodities are like, for me, the great uncorrelated trade,
Yes.
right? They're like that great diversifier. So go on. I'm gonna just turn it over to you. First chart, gold. Talk to me.
Let's do it. So yeah, commodities are a great way to kind of diversify your portfolio, looking at different areas, different asset classes. This makes you a lot of money because stocks don't go up every single day, right? So there's different things that go up at different times. If
Are
you're
you
looking at
sure?
gold, yeah, positive. I mean, I know it's been like that lately, and people feel like that's probably the truth. But guess what's been going up more every single day? It's probably gold. Gold's been doing something that doesn't even do all the time either.
No, but this is a prescient reminder. People, if it feels like stocks go up every day, Jason is here to remind you that they actually don't.
Yeah,
That's
it's
not normal.
surprising. It's really surprising. I know, but like let me just break it down a little bit. So stocks do not go up every single day. So you want to diversify into different asset classes. C's been talking about China for years. We want to be in different areas, doing different things at even different times. And that's going to make you money. Now, gold has been this secular bull market for a long time. Sam had this target a long time ago, basically from the breakout. Basically you draw the move off of those 2000 lows and you get that extension to around $8,000. So, we're still looking at that long-term target. It was funny and silly. People thought we were silly when we're talking about this when gold's at like $2,000. Now at almost 4,000, people are like, yeah, maybe it's possible. I think it's
Yeah.
definitely possible.
This is a fair price target. This is how they teach it in the textbooks. He's just taking the percentage run after the breakout in the early 2000s, right? And reapplying it to the breakout today.
Yes, the measured move. So when we look at that measured move and you see the next measured move, 8,000 makes a lot of sense. And so that's
Yeah.
what we're aiming at. And so getting in the next one, we're looking at gold versus the S&P 500. So look at the S&P 500. The reason why I keep bringing this chart up is that everybody keeps saying this move is possibly over. Is it over? I don't think so. And I think this move is kind of just getting started. Now, that doesn't mean that, this is gold against the S&P 500. That doesn't mean gold's at, $50,000 while the S&P is just rising. Could also mean the S&P starts flattening out and gold keeps rising. Could also mean they go up together and gold just goes up a little bit more. But I think the relative trend will continue for gold outperforming the S&P 500. So I think it's still a place in an area that you still want to be looking at. But what's next? That's a question we started this out with, and Steve posed that, and I think that's a really great way to start that off, which is this is the way I look at the commodity cycle. Now, this is a lot of research. This goes all the way back to my great uncle. Talk to me about the commodity cycles, talking to me about stock cycles, and so on. And something that I've studied a lot over the years is how the commodities move. Gold starts to move first. Now, this is, usually on a bunch of different variables. One is monetary debasement. Think of 2020. You've got every central bank in the world pumping as much money as they possibly can out there. And you got QE infinity out of the United States. You got rates cut to zero or negative in other countries. And so you start to see people go, hey, what's really valuable? And gold was really the outperformer coming out of that bottom in 2020 after the COVID lows. So gold starts to move right here. So we see that start to move first, really led the way. Copper bottomed out just after that. So gold really bottomed out in 2018. started moving higher, had that first breakout in 2019. That was the first 52-week high. Then copper made a 52-week high in 2020. So copper starts to follow it, big move, and then goes sideways. Same thing with oil. Oil was actually the last one to bottom out. That would have been April. If you guys remember, that was the negative front month contract that went on
Well,
negative
yeah.
dollars. Yep.
Gold's working, copper's following, and crude oil's going to zero.
Yep, crude oil
Back
was
then.
straight going to zero. Yep, so that's the thing to keep in mind as we go on with this presentation. But crude oil going straight to zero. That's the thing that not actually negative 50 in the front month contract. It was a massive situation, and it was literally that buy the bottom moment that nobody in the world wanted to buy because that was terrifying. So next thing you know, crude oil bottoms out, starts to move higher, and then right after the election, you get its first 52-week high. That first 52-week high starts to happen. Then you get that big trend up. Basically, all the commodities move through 2021. And if you're in the commodities, commodity stocks, cyclicals, small caps, even some international, you made a lot of money in 2021. If you're just hanging out in the S&P 500, you were massively underperforming the market. So, that's kind of how I think of the commodity cycle. And so as we kind of get through this, I want to also highlight the dollar. Dollars was the biggest piece of the commodity cycle. So this is a chart of the dollar against, and on the bottom of this chart is a 3-month versus 10-year yield curve. So this is a yield curve. So when we're looking at the yield curve, we're talking about looser monetary policy during these uptrends, tighter monetary policy during these downtrends. And what happens to the dollar? During tighter monetary policy, you see the dollar gets very strong. Yep. Looser, the dollar starts to weaken. And so what we saw in basically 2011 all the way to 2020 is that we were in a very tight monetary system at that moment, which really gave a big boost to the dollar. And this was a long-term one, which is the reason why we saw the dollar in such a long-term uptrend. So we get to 2020. Actually, that was 2019, August 2019. We got a negative. We started reading negative on the yield curve. So we got a yield curve inversion. And then next thing you know, after 2020 happens, they cut rates. They basically flood the market with money. This went up again. And what happened? The dollar came down for a little bit. Commodities went crazy. And then once they started tightening again after, inflation was transitory and then inflation moved into the scariest thing in the world, they had to raise rates very quickly. In 2022, 21, 22, this all changed. And so next thing you know, we're heading back down, tighter monetary policy. The dollar gets this big peak in October 2022. It tops out right there. Then we move into this different zone. And usually during these inversion zones, this is where gold really likes it. So gold starts to get moving in basically end of 23 into 24. We bottom out here, then we start to move higher. Now this really stokes the commodity cycle. So next thing you know, we start to see this start to bottom out and look very similar to the yield curve here. So this is the CRB index on the top, same yield curve on the bottom, but the CRB index is, basically a lot of energy, a lot of oil. So if it was a lot of gold, you'd see this thing breaking out already. Obviously, it's more energy. So we get into the same situation here. Now we're bottoming out. This looks very similar. And now we're starting to just break out. Now that the Fed is actually cutting rates again, that yields are actually kind of holding up where they're at on the long end of the curve. Now we're starting to get into that scenario where commodities, especially energy, will start to make a move higher here. So I think that's the biggest thing to look at. Why
do you think so many people ignore liquidity considerations when they dabble in commodities? I mean, go back to that last chart. Mm-hmm. The charts don't lie. This is just too good. These two things really move together, but you don't see this type of analysis out in the wild enough.
No, you really don't. And that's a thing that I've always thought about more than anything else, because when you really think of the commodities cycle, what really drives it? Is it, supply and demand numbers? Well, there's been, for example, corn has been in a massive supply problem for years. You look at copper, everybody's in the world has talked about the copper deficit. It doesn't make copper move either. So why? And that's people have been talking about that since 2015. So why does it move? Well, it's really liquidity considerations or the dollar. And when you start to see those liquidity considerations and you start to see these peaks and troughs, you start to understand how this thing really moves. That's why I'm always highlighting it. Like, I know sometimes I get repetitive with that same chart, but it's like, that's one you got to update every single week, take a look at and know where you're at in the market.
So this breakout in the commodities index probably coincides with, the treasury yield curve moving up and to the right and out, out of negative territory in a good way.
Yes. And so when you're seeing this, this is what we're looking at here. And now that the Fed's cutting rates, now that the 30-year hasn't really gone anywhere, the 10-year hasn't really gone anywhere, you'll start to see this thing move up even higher. And that's really the catalyst for this breakout here. And part of the thing I keep looking at with this breakout is this band squeeze. Like, Steve, I know you know all about the band squeezes, like breakout multiplier kills the band squeeze breakouts. When you're looking at these band squeezes, especially on a monthly chart, this is something that very rarely happens. And when it does, it leads to a big move. It doesn't tell you the direction of the move, but it tells you that there's a big move on the way.
There's nothing that's helped me more in entering a trade, right? This is the moment to enter when volatility is so compressed that it's just it's going to pop any second.
Yes. And once this breaks out of this zone, like, it's going to be a runaway train. And that's what I keep looking at here is like, hey, everything under the surface is basically saying there's a big possibility of energy moving. Last couple of days, energy's been down. People have been sending me messages. Oh man, energy, you were wrong, blah, blah, blah. Look, long term, I don't think there's any way this thing's going to head low. I would be very surprised. And I'll keep going through the reasons why I'm thinking. And that's what I do as a trader. It's the probability models. I can't get everything right, but I can put as much probabilities on our side as possible. And so as we go through this, you guys will see that there's more and more things that I'm going to keep highlighting. But this is one that everybody should have on their radar. That breakout's going to be massive and probably continue to go higher.
And what you're really saying, right? Jason's not telling you he has a magic 8-ball, right? When he's saying, hey, gun to my head, this thing's definitely going higher. What he's saying is that the evidence right now is simply overwhelming, in a sense that if we have to pick a direction, gun to our head, there's only one way this thing could go based on the evidence we have available to us today.
Yes. And here's another piece of evidence. So, Sam and I have been highlighting all types. Yeah, we've been highlighting this over and over again, which is so Gold Rush is a lot of things, guys. Gold Rush, we don't just cover gold. We don't just cover gold miners. We cover energy stocks. We cover all the sectors you see here. We even cover like how the AI trade is in the energy trade and some of the stocks that you can even take advantage of there. So we cover a lot of different things. And we cover bonds, we cover currencies. So just about everything that you guys need for macro, we cover over there at the Gold Rush. And so when you're looking at this, we've been putting out stuff on uranium for all year long. We've been putting stuff out on metals and mining all year long. We've been putting stuff on copper miners all year long. Lithium stocks was a new one we put out not too long ago. Steel stocks not too long ago as well. So once again, this is why this chart here is really why I don't want to bet against energy moving. And the reason why is if you look at all of these and you go back through the cycles, and what you have to do then, because there's not ETFs for most of these going back that far, so you go through the individual names, some of the biggest names, and what you see is when all these are moving, energy usually catches up at some point. So it's from the laggard, starts to become a leader at some point. At the moment, it's lagging. It's not pretty. It's not outperforming the SPY at the moment, but at some point it probably will. So seeing all these move, and this not move, so XLE doesn't move and the rest of these sectors are moving, that would be like the first time in history that's ever happened. So I would be very surprised to see us stop here. I think this is going to just continue.
See, this is great. Commodities are really nice in a way that Jason just told this beautiful story. And the reason he could tell it that way is because it happens this way over and over and over again throughout history, where gold and the metals move first, and then, okay, look at the copper, and then, okay, it's energy's turn. In the equities market, the world that I'm living in most days, we don't have this like clear sector. Listen, people have tried to do it. They have. Jason, you know what I'm talking about. Mm-hmm. The problem is every cycle is different in terms of tech starts, financial start, right? You always have like a different sector culprit, a different cycle leader. So I can't paint this beautiful picture that Jason's doing for commodities for the stock market in an honest and genuine way because it's just not there. Historically speaking, we don't have the data to back it up. I can't come to you guys and say, look, financials are going to go first, then they're going to hit the discretionary, and then they're going to come in and it's going to be tech. It's not that clean. It's not that nice. But in commodities, we do have that story. So you look at a chart like this, All these things move together, but in sequence, right? One first, then the next, then the next. You look at energy here, you got to throw some ketchup on this oil and gas dog. I mean, this is the biggest catch, right? Look at this.
Yep.
This has ketchup trade written all over it. My mouth is literally watering looking at this performance chart.
No, it's literally like one of the best things. I was working on it the other day. I was going back and forth with Rick, trying to find stocks that were older, just kind of really working it through. And I was like, man, this really just year to date really gives us the right picture here, which is all these sectors are leading the S&P 500. Like, I don't think I highlighted that. That's the S&P 500 right there. So all of these are leading the S&P 500 by quite a bit, at least double. And so, like, and part of the thing that we do as traders, and Steve, you know this just as well as I do, which is understanding that if we want to perform like the S&P 500 or like the Mag 7, we might as well put our money in a Mag 7 fund or the S&P 500 and walk away. Be a lot easier. What we're trying to do is get these type of returns, those outperformers. Some of our mining names are hitting, 200%, 300% very quickly. These uranium stocks, we have some of them that are going up 100, 200, 300%. I mean, this is what we're trying to do. This is where the outperformance lives. And that's what we're really trying to do here at Gold Rush is find that outperformance, really take advantage of it at the right times. And it really looks like the right time.
And I'll tell you, say another thing. A lot of these commodities charts, just take it from the top here, GDX, massive base that it's breaking out of right now as we speak. GDX making new all-time highs. Uranium, you could do it with URA, but really just look at the industry leader, CCJ, breaking out of a monster base that dates all the way back to 2006, 2007, great financial crisis highs. So uranium breaking out of a massive base. Gold miners breaking out of a massive base. Okay,
Metals and
XME.
mining.
Look at XME. Go zoom all the way out. Again, a great financial crisis base. Massive. It's about to print. Literally the breakout. We're just on the precipice of a massive resolution here right now. COPX, SLX. Go on down the line. Look at copper miners ramming right up into those 2011 highs right now. There are giant bases everywhere if you look at the tickers in this performance chart. And then you got to go to energy. Jason has the chart. If he wants to, there it is. And then you go to energy and you see this massive base that, boy, it resembles all the ones that I just mentioned that are breaking out now. And you got to say, Jason, this is one of those things where don't overthink it. Make a list. All the other ones are going for energy. This isn't a question of if, it's when.
Yes, exactly. Great point. And that's what I keep highlighting here. And these breakouts continue to happen in all of these sectors. This is the next one that's most likely going to happen. And there's only one thing that I would say to really watch out for, and what will tell you that this trade is dead. And once again, what I'm saying here is put this on your radar. We have all these other trades. They're all making money. Gold Rush clients, you guys are killing it. Continue to be in those trades in those sectors that we just highlighted. But energy is probably next. And this is something that I continue to look at and go, okay, well, I think, and there's not a ton of people actually talking about how bond yields could go higher here. I'm sure Weitzel's probably on my side on that, but that's another crazy macro guy like me. But
well, this is the brain buster for me.
Mm-hmm.
This chart.
Let's talk about it.
You tell me. I think of the thesis for energy stocks right now as a person who thinks interest rates are going lower for at least right now, watching them. And I think of this and I go, can energy still work? Like, this is breaking my Intermarket brain. I'm like, I think it could. Can this dislocate? Can this relationship dislocate? Can I have my way and bonds higher, energy stocks higher at the same time? Don't be nice to me.
Can anything happen in markets is the first question, which is of course, like anything can happen, but this relationship has always been so tight because one of our biggest weightings in inflation in the United States is always going to be oil. So as energy stocks are moving higher, it's going to put a lot of pressure on bonds. And so that's where I usually start with this. And if you look at the correlation, it's pretty heavy at all times. Like it's pretty inversely correlated. If energy is going to go higher and break out of this range it's been in for a long time, it's going to put a lot of pressure on bonds. But it's the same way if you look at bonds. Like here, bonds have been just moving sideways basically since the end of 22. Same with energy. Since the end of 22, they both have just been moving sideways. The only difference here to me is that energy, you could say this isn't a primary uptrend and we're just consolidating up here. And you could say bonds are in a primary downtrend and we're consolidating down here. So if we look at it just based on the price action, I still think bonds are probably headed lower. So I'm really looking at here that so the Fed is lowering rates, right? And what you saw the second they started to lower rates, the long bonds started going up. So why did that happen? Somebody somewhere knows, just like I know, and you know, that if they're lowering rates and they're creating more liquidity in markets, we're going to see more inflation. Everybody out there, though, we can all debate on how much inflation is out there, but nobody would say that inflation isn't sticky. It's stuck around. It didn't go anywhere. It really looks very similar to this chart if you just go to the grocery store. Inflation went up and then it just kind of went sideways. Everybody at the grocery store is going, oh my God, steaks are $20-$30 each. And, like it's ridiculous if you just want to go grocery shopping for your family. So, for me, if we get that lower rate and we get any more inflation, which Powell has warned about, he said, if we lower rates, we're going to get more inflation. He wasn't wrong. I think he's done a pretty good job of just being very honest and objective about the whole situation. And I do think he's right. If we lower rates here, if we keep lowering rates, we're just going to see more pressure on inflation. Inflation will probably move higher. And remember, the bonds are very complex. There's many different durations. So when we're talking about the Fed rate, we're really talking about the 3-month rate. So the 3-month rate is really what the Fed's tied to. And this is the 20-year rate, 20 to 30 year. And this is why this is going lower. This really is tied to growth, inflation more than anything else, especially right now. And if we start to see more inflation out there, this is going to go lower and XLE is going to just skyrocket out of here. And I think that's going to happen. I really think that's the trade coming up here.
Yeah, I love this. It's a good point. I mean, a lot of times we'll try to chart out inflation or really inflation expectations, right? I like the TIP IEF, tips versus treasury bonds. But if you look at something like that, TIP IEF, overlay it with XLE, it looks exactly the same. What Jason's saying, both of these trends really peaked and rolled over into a holding pattern, a really prolonged sideways range in early 2022.
But the best thing about this too, which is keep an eye on this trade. You start to see TLT start to get above these levels here. Then I would be like, okay, the energy trade's probably dead. And that's something that you have to keep thinking about.
Or not dead, just not there yet.
Not there yet. No. Yeah,
bond surge right now probably means more sideways, more in this range for energy, right? Maybe we got all excited here thinking this is the go time. Maybe it's not. This is probably a good indicator. This chart helps tip you off to that, right?
Yes. And so if we get over those levels, I would say, okay, it's not go time just yet. But at the same time, if TLT is rallying, I'm not bearish on gold yet. I'm not bearish on silver yet. So we'll just see exactly where we end up. But I would be very surprised with all the pressure and all my intermarket analysis to see bonds start to just have a crazy rally here. That would be very surprising to me. But once again, like we talked about, this whole thing could be anything can happen. Anything can happen. But but mainly the probability.
On an analyst call with you, and I think I said never say never when it comes to intermarket.
Yep.
Never say never.
No, the bond. I would, but the most surprising thing in the world to me, just to take this up and end this, would be if bond prices started moving up here, and energy started moving up here too. That would surprise the hell out of me. But once again, anything can happen. But that's one I really doubt. It's always possible though.
I'm rooting for it, but in the back of my mind, I know I'm going to have to cut out of one of these trades in the future.
Yeah, and honestly, like I mentioned that before, like as a short-term trader, like you want to take those trades, that's fine. Also, those being both kind of diversified in different ways, you might get a pop in TLT, make some money, take that off the table, and then you might start to see XLE start to move. And that's
there are ways to win. You're right.
Yeah, lots of ways to win as a trader, lots of different time frames. Next is Baker Hughes. And the reason why I bring this up is if you're looking inside of XLE, you're starting to see some of these names really show some strength. And here's
a big name. This is a bellwether as far as I'm concerned.
Mm-hmm. And this
is the old GE Energy, by the way. They merged and they did a thing, and now it's the BKR.
Yep. And so now that we're looking at this, I just want to say, like, if you want to take the trades in the energy sector, this is how you do it. You don't go in and try to find like, hey, this one's on the floor. Like here, I want to buy this. This one looks cheap. I want to buy this. The whole sector has been pretty beat up, going sideways. The ones that are leading, if you want to take this trade, that's the ones you want to be in. Baker Hughes, that's one that's leading. If you look all over the world, there's a couple of them. They don't all look great, but there's some that are leading. Buy the leaders. That's the biggest message from this chart today. Buy the leaders, stay in the leaders, because the leaders will continue to lead if the sector also catches up to it. That's a very specific thing that everybody should pay attention to here. You want to own the leaders. And so next up, we're looking at the small cap natural resources. Rick sent me this today right before we went on, but we're looking at a lot of these natural resource trades starting to move. Like we're even seeing some of these oil and gas names starting to move, BKV, CRC. So we're seeing a lot of these small cap natural resources names starting to move. And I think to me, that's something that you really want to pay attention to here. Small caps are starting to move. We've been talking about this a lot at All Star Charts. But also we want to look at that throughout all the sectors. Junior miners, explorer miners, we've been in those for a long time. Those have been moving like crazy. Now we're looking at some of these natural resource names. So I think these will catch up. We're always putting out these great scans at All Star Charts. So definitely be on the lookout for more of these.
The commodity space is really for the small caps.
Oh, for
That's
sure.
why we do this. Like the best commodity stocks, they're smaller. A lot of times they're ADRs, right? They're not US based. Talk about how US dominates so many industries. Not commodities. Not commodities at all. It's the opposite, really.
Yes, and especially right now, like we're looking at, if you're looking at like let's say small cap tech, some of these companies are going to do great, some of these companies are going to go to zero. You're looking at small cap commodities, same thing. However, those ones that are going to go up, they're going to go up a lot more.
Yep.
So if you're looking at like one of the large cap names in gold miners, let's say NEM, and that's hitting 100%, you're like, wow, that's amazing, 100%. If you look at some of the junior miners or explorers, like you're looking at 300, 400, 500, even 1,000 in the same run. Especially if you go back and look at the last commodity cycle, like we're only like a year or two into this gold cycle really playing out. If you go back to the last commodity cycle in 2000s, you're seeing some of these names hit 20x, 30x, and so on. So those small names became the big names, and to this day, AEM was one of them. Now that's a big name. It's in the large cap GDX index. That was a junior, even an explorer at one point, all the way back then. So keep paying attention to these things.
Question in the chat for you. Is something going on with? How do you feel about the Norwegian National Oil Company? Isn't that like Equinor?
Yep.
Like the state oil?
Yep. I haven't looked at it lately. It's on one. How's the chart look? You got it up there?
Yeah, Equinor.
Let's see.
EQNR, isn't it? I don't know. I'm not sure what's going on there to answer the question. EQNR, it looks all right. You got a decent coil there. A lot of these countries, they have like large state-owned operators for oil and gas, right? A lot of countries.
Yes. And so and the way I really want to play this is like looking at like those things look great. If they look okay, fine, but really wait for the breakouts. Like XLE, it gets over 101, like buy the crap out of it. You're finding some of these big names, they get XOM even, that gets over its major levels. Go ahead, buy that. But really, like as things are consolidating, and Steve, you know this just as well as anybody else, that's the time you just get frustrated as a trader. Like this is why a lot of the times we buy these breakouts or breakouts of flags and so on. Like it's because you're going to get frustrated if you keep trying to buy this thing. Like everybody who's traded energy, and this is part of their bullish thesis on it, everybody hates it because they've just been chopped around for so long. I mean, go back to
3 years.
Yep, 3 straight years of getting chopped around. That sucks. Everybody wants to make money immediately, and it's just not happening. And
there's been real opportunity cost there, so people have gone burnt.
Yes. And the answer to that is just waiting for the breakout. Be very simplistic about it. We actually hit that breakout level, buy it, and let's see where it goes. Like we want to see that start to break out. We want to see this possibly what we're looking for here, at least what I'm looking for here is for TLT to break down. We start to see that break down. I'd get even more bullish on this. So
go ahead.
Go ahead.
No, there are always early leaders. And I know you guys have been leaning into that. You guys put out a bunch of trade ideas with the gold rush. We put out some, with premium, but like we're not missing much. I know we have some trade ideas here. You guys were buying gold miners, really, the early leaders, long before the massive breakout in gold. Do you think something similar a similar opportunity, is arising here in energy where you could start to just go and buy the ones, like you said, that are breaking out, where we do have confirmation that a new up leg is maybe underway, even ahead of the, broader sector indexes.
Yeah, and I think the Baker Hughes charts is a great place to start for everybody, but also just going back to this one, like the idea of, hey, energy isn't going to catch up here. That would be mind blowing to me. Once again, anything can happen. The title of Steve and I's show today, basically, but anything can happen. But I would be very surprised. This would be the most surprising thing that would ever happen in my career, where I'd see copper miners, gold miners, uranium, metals and mining, steel miners, lithium, and then XLE is just the laggard for the rest of the year. That would blow my mind. I put money at some point that this one will start to catch up. And start to overtake SPY either by year end or the beginning of next year. And that's when this thing's really going to get started. So look for that relative strength, be on the lookout for it. And when that happens, get ready to buy that thing. Cause I think that's going to be the next sector that really takes off here.
You know what I think you need at this point from energy? What you saw from healthcare this week. That's all I need. That's all I need is a nice little trigger momentum signal. Some sort of initiation style momentum. We call it starting line momentum, right? A little thrust here. That's what I want. Give me some big green sticks, just a couple days at the index level in energy. I'm all in. We just saw it with healthcare.
And that's what the point of today's show is, to just put this on your radar, guys. Put it on your radar. Be ready for it. Because it
could happen tomorrow.
Going to happen. Yep. It could happen tomorrow. It could happen the next day. Also, remember, when we get towards the end of the year, we start to get in a very favorable seasonality towards energy. If I was really to take a guess on energy moving, this is just based on seasonality and the way I've been trading for a long time, I would put November, December, January. I would say those would be the times where we'd probably start to see this thing really take off. And that's when you see the breakout. And also you want to start to see oil. Oil's going to be the next one. We really need that to get over 80. That thing's been chopping around, looking pretty miserable for a while. That gets over 80. I'm all in. But until that hits over 80 and we get energy, the sector over 101, I'm still kind of hesitant on it. But I want to own the leaders right now. You're right.
Jason, have you seen the action in coal lately? These stocks are waking up. Does that bode well for traditional oil and gas? It's just totally different. There's no intermarket evidence there.
Yes. Yes. So that's something that I was messing with that today, and I was looking at it. So we actually put out some coal trades a week or two ago. So on our Friday report. So we put some coal trades out. We're starting to get long coal. That's the other thing is okay, let's say this is all crazy. And everything I said is wrong. If coal starts to move and energy doesn't start to move, that would be the most mind-blowing thing I could ever see in my life. That would be so surprising. So coal, we're starting to see buy signals there already.
Well, if you really want to know, if you're picking up what Jason's putting down, well, one of the largest coal producers in the world, I would consider one of the industry leaders, Peabody Energy, literally just went from 10 to 30 off of the April lows. So
very quickly.
Starting line momentum there.
Our coal index at ASC, that's hitting new highs. We continue to see this, and we see some names here. HCC, coking coal name, that's starting to move. So we're seeing a lot of these coal names starting to move and they outperform. METC, yep. So there's a few of them in here. So once again, take this list, guys. Definitely look at it. Make sure to subscribe. You guys will get a lot more scans just like this. So let's get a couple of these, what we're talking about here and what could possibly happen in energy. And these are the things we've been finding, looking at, and these are quick trades. Some of these trades we've bought all the way back here, but we're just talking about the ones that move very fast, very quickly. So KGC here, huge base. And Steve, this is one thing we do very well here is buy these massive base breakouts. The bigger the base, the bigger the space. And that's something we see over and over again. So these are always on our radar. And so we buy that breakout in 241 sessions. So pretty quickly we get 160% gain. So this is without options, just owning the stock itself. And this is even some of the smallest names we bought. So we have ones that have even outperformed even more.
This is a large blue chip producer, and Jason's just showing you, hey, we buy this chart pattern that literally when we see it, we just buy it. And two targets hit in less than a year. And this is honestly one of the largest, bigger players in the gold space. So I would say a lot of that junior minor risk is actually, is it ever really removed? No.
No.
But a lot of that is you're insulated from some of the crazy town stuff you get with the smaller names here.
Yes, and we're always looking at Sam's great at finding these names, finding out what the risks are, and then getting into these trades. So we're finding a lot of these are moving in a big way. You know, we even had like some smaller names, SSRM, that's up 400%. So we're looking at some of these names that are big names, small names, some names that we're just keeping just for our subscribers because they're active trades. But these are the ones that we're putting out now that could look very similar to what energy looks like at some point coming up soon, and we're going to be on those trades as well. So DRD gold, that's another one. Getting above the VWAP, that's something we also bought. Got a big move, 15% in 310 trading days. So these things. I mean, this is what I love about the commodity stocks and the commodity sector more than anything else. Like, yeah, it sounds cool to own like some of the big names in technology. It sounds cool to own the S&P 500. But if you really want those 215, those 300, 4x, 5x returns, like these are the type of names you need. And I tell people this all the time. When we look back and we say, Sam and I would be like, oh, target here, target there. And I'd be like, when we look back at this in like 2 years, and most of these trades were put on just this year or late last year. We look back, we're going to think, hey, all these targets are really low. This stock could hit 100, pretty easily. This stock could hit 200.
The truth is about these companies, these are highly leveraged vehicles. Many of them, as you go down the cap scale, unhedged in whatever their specific markets are, right? Like these are huge beta plays on the spot markets.
Yes. And so there's so many of these. I mean, we could stay here all day and go through all of these names that trades we have open, trades we've had closed, trades we're still running, and they're just look, very similar. These massive base breakouts, and we're really good at finding these within each sector. Like we have names that look just like this in coal. We have names that look just like this in lithium, solar names, even like whatever you want to look at. Copper. BVN's another one that we're trading. We're trading a bunch of these names and they're looking very similar. These are just the ones that move first because remember, gold moves first. So then we get into the copper miners, then we get into lithium miners. Now we're looking at energy. So we'll see where that comes up. So this is another one. It's in 108 days. We get 75% move. It's still just trending nicely. We're still long this position. So these are all positions that, we're in, but mainly why I'm highlighting them is because at the end of it, this is going to look very similar to how energy looks. These very frustrating long-term base, like Steve keeps pointing out, we have these bases and all of these. XME broke out of the 2008 highs. So this looks very similar. This is breaking out from those financial crisis highs. Then it moves. Then it just continues to take off. We look at this one, very similar thing. We got over the 2020 highs, massive breakout, continues to take off. And
all right, Jason,
we're looking at here is energy.
I think they get the picture. What Jason's trying to say is he's very well versed and has a lot of experience in picking leaders and identifying these bases. We've done it in gold. We've done it in other areas of the commodities markets. And now it's coming in energy. And he's going to do the same thing for you there. He's going to find these big bases. I know they're there. I have some coming to mind right now that I'm thinking of that look very similar to these charts that you're showing in non-energy stocks, but energy stocks. And that's what you're basically bringing to members right now, right?
Yes.
Hey, we've nailed it in precious metals. We've made a lot of money in gold, guys. We've done well in copper and the industrial metals already as well. There are probably profits to be taken and maybe even redeployed from those trades, or this is just a broadening. You got some dry powder. Time to sprinkle some on oil and gas too, and expect the same as we saw from those other two groups.
Absolutely, Steve.
Tell them what they get if they sign up for Gold Rush.
So yeah, if you guys sign up for Gold Rush, all these trades that we're putting them out all the time. So you guys come to Gold Rush Live, that's great. But if you want the trade ideas, you want the in-depth analysis that we put out, in all markets, from bonds, currencies, basically anything in the macro space or the future space that I cover, getting into the miners, metals and mining, energy, and so on. Like that's what we cover here. So get direct access to me and Sam, and we put out great trade ideas all the time.
So you'll get basically all the latest trade alerts on energy stocks, really all commodity stocks. Plus the new small cap report. We just did a special small cap report for metals and mining stocks. You guys do a weekly video, right? The weekly Gold Rush report.
Weekly video on Mondays. So we put that out. Commodities on Fridays, bond reports, currency reports, you name it. You guys basically get it.
Access to rangefinder to help you, manage your account and your different positions. And I think, the biggest one is that this isn't just about commodities, right? Jason's trading all sorts of different futures markets,
Oh,
right?
yeah.
So you're not just my commodities guy, you're my dollar and currency guy, you're my bond market guy. You get all that too, right? So these guys are writing regularly about all FIC markets,
Mhm.
fixed income, currencies, commodities. You get all of it. We're focused on commodities. I think they're probably the biggest opportunities there, in terms of making money for most people, but it comes with everything.
Oh yeah, you get everything there, and I mean, I trade everything. If you go all the way to German utility markets and so on, like you'll get some reports once in a while about some really weird stuff. But most of the time, we stick to the things that you can trade. You know, going from the commodities, telling you how they are, and then getting into the equities and how to take advantage of them.
For sure. And then, as always, this comes with a 30-day risk-free money back guarantee. If you don't like Jason for whatever reason, that happens. They don't all like you.
I
Email
don't know.
Mary, and we'll get your
Call
money
Mary
back.
if you hate me.
But really, no, the truth is we typically sell this for about $1,300, marked off just about half price. Right now, you can get in for $700 annually. We don't run these offers very often. This is a great price. Probably won't come around again. It's like buying the base breakout here for your membership. Jason, can we hit a couple questions and then get ourselves out of here?
Yeah, let's do it.
This is a good one. If energy and healthcare, you got us there, are perking up, are there negative implications for basically the broader indexes, Qs and SPYs, but really the broader stock market?
No, I like that question because it's for me that's something that's on the radar. So if TLT starts to go up, let's say healthcare really is perking up. It's not just a like utilities did earlier this year. Utilities started to move and then they went
Yeah.
off. So maybe healthcare is going to do a similar thing. But if I start to see healthcare really take off, and then I see TLT start to make a move higher, that's going to be something that's going to be very negative to energy. For the S&P 500, I don't know. I think the S&P 500 would be just fine in that scenario, until you get to a point where like maybe the dollar starts to join the party. If the dollar starts to join the party, you get bonds moving higher, you get the dollar moving higher, you get healthcare moving higher. I think at some point that's going to put a lot of pressure on the broad market.
It's this age-old question. JC and I argue about it over healthcare a lot. Are these sectors defensive? They're really the two wild cards for me, healthcare and energy. I think the honest answer is sometimes.
Sometimes,
Some,
yeah.
Sometimes leadership from these groups is defensive. Other times it's probably just fine. Don't let something like that completely psych you out of a big trend. Okay.
Yep.
What do you see as the implications of this commodity bull cycle for things like the Australian dollar and Canadian dollar? Because back in 2000 2010 period, it was very bullish. This is another great question.
So this goes back to kind of the global currency war, race to the bottom idea. So if you have this whole idea that all of these countries kind of want their currencies lower, it would help them with their exports and imports and so on. So they're all happy to have a little bit weaker of a currency. Now, also, if you add in the implications of a lot of these countries have really weak monetary policy at the moment. So when you're looking at that, you're also going, well, even though the US dollar is moving down, these are all kind of moving down in a way with it. If you really weight like the Canadian dollar against other currencies, if you see the Swiss franc, I think it's up 13% this year. The Canadian dollar is barely moved. Same with the Aussie dollar. So, you want to continue to look at those things. I think in the end, what really is the winner in this scenario is things like gold. I think
Yep.
gold is probably the winner in the scenario. If you weight gold against any of these currencies, it's massively outperforming it. I think that will probably continue, and money will probably continue to be made in the commodity space as long as that's the case.
Love it, Jason. Any closing thoughts?
No, thanks for coming on, man. This is always fun. I always love talking with Steve and just getting hyped and talking about commodities, man. It's a lot of fun. So thanks for everybody for coming. Absolutely love talking with you guys every single week on Thursdays. See you next week.
I believe in the commodity super cycle thesis. I'm heavily invested in this. Jason has been my guy to keep me on the right side of this trade. There's been some ins and outs of it. These are prolonged cycles.
Mhm.
So I think, you get in, you shop the deals, you get the membership at 50% off, and then you catch the next wave, the next stage of this commodity super cycle because it's going to run for years. It's not even close to over yet. I think this is an exciting corner of the market. There's big beta here. There's opportunity for big leadership and some real alpha to be generated in an uncorrelated way in your portfolios. And Jason and Sam helping them, we couldn't have a better team of guys on this. So thank you all for joining us today. Thank you, Jason, for coming and dropping a 45-minute knowledge bomb about the commodity super cycle for everybody. I think this is very important context. Listen, it's not the first time we're telling this story, and it won't be the last. We're going to come on here and keep reminding you every step of the way as there are important developments. But God, you're getting really good at this, dude, because you've been telling the story for 4 years now.
Yeah,
And just
it's
continues
easiest
to play
story to
out.
tell when you've been in it for a long time. You've been trading it for a long time, but it's a tough one because a lot of traders aren't very they don't know a lot about the space. So I think
Yeah,
that's one thing that's really great about Gold Rush is
yeah.
that if you don't know a lot about the space, you want to learn, you want to make some money while you're doing so, this is the place to be.
I love it, Jason. Thank you so much. Everybody, thank you for joining. Hope you enjoyed this video and our little talk today. Happy Thursday. We'll see you on the morning show tomorrow, 8:30 Eastern time, as always. All right, everybody. Adios. Thanks, Jason.